It's Thursday, July 21st, 2022. Well, we continue to watch this rally on Wall Street, no surprise. Again, it's so artificial, it's so fake, it's so manipulated, and so many of you see exactly what is happening. But as we watch this, it's another reminder of why we must be planning ahead, because they're doing everything at this point to keep this market functioning, to keep it alive as the economy continues to crater. The economy is collapsing every day, and it's shocking that if anybody cannot see that, there's just no hope. It's so obvious, it's so apparent how damaged this economy is right now, and it just seems that every day the economy just seems to be beaten up more and more. But while the stock market is up today, I want to go over a little bit of the data with you that we got today. And I don't know, maybe you can share this with me. Maybe you you can convince me that everything is okay. But jobless claims rise again, in another sign that the labor market is cooling. 251,000 people filed first-time jobless claims last week. This is the highest weekly level since November of 2021. Yet, stock market across the board up today. It's shocking. It's laughable, but you just can't laugh, because this really is no laughing matter. There are people that believe this. There are people that are making huge financial choices, decisions, based on the information that they're getting, and this information is corrupt. It's completely fraudulent, it's criminal, and there are people out there that believe this. Snap shares plunge on disappointing second quarter results and plans to slow hiring. Snap shares down 25% as I make this video. Markets up today. Keystone RV, we touched on this the other day. Well, they're going to close a second plant. 300 people are going to be looking for work. This plant also in Elkhart, Indiana. And Elkhart, Indiana has one of the lowest unemployment rates in the country. So if it can happen, if you can lose your job in Elkhart, Indiana, you can lose your job anywhere, ladies and gentlemen. A second Keystone RV plant shutting down, 300 people going to be losing their jobs. Here's another one on Barron's. Ford plans to cut 8,000 jobs as it aims to increase EV production. 8,000 jobs. Now, these are good paying jobs. And think about the people at Keystone, probably very good paying jobs, people at Ford. How are these people, when they lose their jobs, going to continue to pay their mortgages, their car payments? Do these same people have a 6 to 12 month cash reserve to cover their bills? More than likely, most of those people do not. Crypto startup blockchain.com lays off 25% of staff as Three Arrows Capital fallout spreads. Convenience store 7-Eleven cuts 880 corporate jobs as part of restructuring. We're going to hear that word a lot, restructuring. That means that a lot of people are going to be losing their jobs. And again, I'm sure that a lot of these people, and these are corporate jobs. These aren't people behind the cash register. These are corporate jobs. These people own homes. They own cars. All this on debt. How are they going to continue to make those mortgages and those car payments, pay those credit card bills every month, pay that college tuition debt? How are they going to do this? Yet market up today. And this was really, really shocking. The state of the U.S. consumer. AT&T crashes. Shares today fell 11% as Americans cannot afford to pay their phone bills. Consumers are putting off paying their phone bills. You know, when I make my payment on my phone bill with Verizon, they'll ask you, are you having any problems? They basically, ask you that, what can you pay today? If you can't pay it all, what can you pay? They'll literally, take $5 or $10 as a payment. They're doing anything now to recoup this money that's owed to them. And so it's shocking when I make a payment over the phone that they're asking these kind of questions, and they've been doing it for the past year. And when you buy a phone today, the phones are so expensive that most people are financing their phones along with the phone payment. So you go in, you want your $1,200 or $1,500 phone, you're paying $100+ a month, whatever the service you might have. And so they know that most people cannot pay $1,000 or $1,200 or $1,500 for a phone. So they break it down into the payment with the cell phone payment. And so I'm just thinking, like, what do these people have? $200 phone payment every month. The cost of the phone, cost of the service. I mean, something is going to give here, ladies and gentlemen. There's no doubt about it. And another story that nobody's talking about, I haven't really seen much of it on any of the financial channels. Reports of depositor accounts being frozen as China's banking crisis spreads. There is a chance that China could see bank collapses in their country. They've got real serious trouble. According to the article, bank depositors in several Chinese provinces have reported bank and credit accounts have been frozen. The people there, many of you may know, are boycotting their mortgages. They're refusing to pay their mortgages now. They stopped construction in China because they've run out of money. Government officials gambled money that was supposed to go, construction funds that was supposed to go to the construction of properties. And in China, these people pay up front and they're waiting for a place to live. Now they paid and there's no construction. There's no place for these people to live. And so there's a huge boycott, and now the banks are in huge trouble, shutting down. There is no, ATM. There is no credit. There is no walking into the bank. It's all frozen in many parts of China now. And it's another major reminder to all of us that we have to ask ourselves, how safe is your money in the bank? Because once you deposit that money in that savings account, in that checking account, that is now the property of that bank. If that bank gets into trouble, and I've said this many times, the bank is going to look out for the bank, not you. They will shut the doors, they will shut off the ATMs, and we've just had countless reports of so many online banking services shutting down, ATM shutting down. It's happened to me multiple times. Going to the bank, it's closed with a sign written out with a magic marker, closed today. No reason. We'll be open, in a couple days. Absolutely incredible. And anybody that trusts putting all their money in a bank right now is taking a huge risk. So I want to switch gears here for a second, and I want to talk about this potentially very dangerous housing collapse that I believe is coming. I watched a show last night on YouTube. Very good channel, Valuetainment. I'm sure many of you have probably seen it. Patrick Bet-David is the host of the show. Really smart guy. Great story how he came to America, served in the military, became a multi-hundred millionaire. I think he's worth $200 or $300 million, has a big insurance company. But he's a guy that just, to me, calls it the way he sees it, doesn't really take a political side, just calls it the way he sees it. But he was talking about the potential of a massive housing collapse. And this is where Dave Ramsey and all of his real estate friends are completely wrong, and where somebody like Patrick Bet-David is completely right. This is why I think the way you think, because we can see clearly what is coming. Because when you have a collapsing economy and you have a delinquency rate, the highest probably ever in automobile payments, which is 6 to 12 months ahead of housing, this is already telling us the path we're going down. The trend that we see today developing is going to tell us what's happening tomorrow, and we're already seeing people not paying their bills. If people cannot pay their phone bills right now, if they're not paying their car payments, how in the world are they going to continue to make their house payments? Dave Ramsey and his friends are wrong. So let's go over some of the data, some of the data points that Patrick Bet-David explained last night. The first 6 months of this year, $300 trillion in wealth, in retirement, lost. $2 trillion in crypto, lost. And he goes on to say, when people stop making money, when they're taking on big losses, they have less disposable income. And we're beginning to see that right now, where people are pulling back on big purchases, where people cannot even make their car payments, where they can't make their phone payments. He goes on to talk about the 3 Ps that Elon Musk gives. The 3 Ps: predict, prepare, and preserve. Predict. Be multiple moves ahead. I think that this is so first off, if you don't like Elon Musk, I get it. But think about what he's saying here. Be able to predict things. And you're seeing and being given the data right now on a daily basis. You see the closed retailers, the closed restaurants. You see the manipulation of the markets. You see the wealth that has been wiped out of these markets this year. You see the money printing, etc., etc. But be able to predict, be multiple moves ahead. This is a chess match, ladies and gentlemen, and so many people wanted to get rich quick and thought that this was a sprint. No, those people, many of them have already lost, and many of them are going to lose. This is a long marathon, a long run, and you must be multiple moves ahead. This is gonna play out for a while. Be able to prepare, get ready for what is ahead. Are you prepared for that? What if the lights go out, power goes out, bank closes? Do you have cash? Do you have barterable items? Do you have food? Do you have water? Do you have a way to protect all this stuff? That is called preparation. We do that. We talk about that daily. You could go out right now, take $20 and go buy a bunch of canned food at a Walmart, at a Winco, at a Kroger store, wherever. Get something. Persevere. Find a way to make it through. This is why I say that we all have to get in a mental mindset right now. We are going to have to persevere. We're going to see things we never thought we would ever see, things that we never thought humanly possible here in America. We're going to see things that are going to be biblical. They will be epic, and it has begun. We've already seen things that we never thought possible. How about shutting an economy down for over a year? Did anybody ever think that was possible? And I can tell you right now, the way I see this is with the 3 Ps, gold does an incredible job to predict, prepare, and persevere. This is why I continue to buy gold. Making another gold purchase today after I make this video, because I think gold does all that. It predicts, it prepares, and it perseveres. And this is why I believe it's important to own gold, because it's really going to help you persevere. It's going to really help your preparations. And gold is predicting right now what's coming, and that you need to be multiple moves ahead of what's coming. And this is how gold protects you and preserves that wealth that you have. Patrick goes on to talk about the mortgage industry. And this is another indicator that we've got big trouble, that the real estate market's in big trouble. And think about, if the real estate market goes, how many jobs are going to go with it? How many banks made terrible loans out there? People where 40, 50, 60% of their income is going to a mortgage payment right now. This is going to be a disaster. Loan officers in very big trouble, he says. When you look at mortgage apps, mortgage applications are down 52.7% from a year ago. Refi applications are down 75% from a year ago. No cash out refis, down 93% from a year ago. Loan officers, 80% of their income is based off of refis. So some of these people, he says, were making $50,000 a month. Now they're making $10,000. Some of them were making $20,000 a month. Now they're making $4,000. These same people are going to have to go out and they're going to have to get a side hustle. They're going to have to do something. But you look at what's happening in the real estate market, and take a look at what's happening to loan officers, and that's all you really need to know where this is all going. He goes on to say, if you bought a $500,000 home, you got a 3% rate. You're paying $2,108 at 6%. You're paying right about $3,000. At 9%, you're paying over $4,000. How many Americans are going to be able to do this? And he believes that we're going to see mortgage rates, 30-year mortgage rate, break 10%. And remember, if you don't have perfect stellar credit, you're not getting that 5.9% today. You're probably paying 6.5%, closer to 7%. But if we go to 9%, 10%, who's going to be able to buy a house? Who buys a house in America? And nobody can guarantee that that's going to happen. He goes on to say that he's not saying that that's going to happen, but what if it does? Is it possible? It's very, very possible that it does. And he believes it will, but nobody has a crystal ball. Go back to 1970, to the year, all the way to 2007, 2008. Rates from 1970 to the 2007, 2008 era, rates were never below 5.7%. 1970 to 1981, rates were between 7.5% and 18.5%. This is history, ladies and gentlemen. Having 2.8%, 3%, 3.5% rates is not normal. What is normal is 7.5% to 18.5% mortgage rates. That's what's normal. We have fed the economy with so much fake success, and it's about to pay the price for it. So people were allowed to, pay 2.8%, 3% on a 30-year fixed rate, allowing them to buy these homes which they would never be able to afford. And let's not forget also that many people put down the bare minimum 3 to 5%. Many people out there never put down 20%. I'm sure a good number did, but a greater number put down 3 to 5%, never had a lot of skin in the game. Patrick goes on to say that we could see property values drop 30, 40, even 50%. I don't think anybody out there can deny that. Anybody that's being sensible, anybody that saw what happened in 2008, I don't think you can argue that. I witnessed it right here in Southern California, one of the hottest housing markets back in 2004, 5, 6, and 7, and then the crash around 2008. I saw properties discounted 50, 60, even 70%. I saw vacant land. D.R. Horton was selling land at 10 cents on the dollar because they couldn't finish these developments. They were dumping it, fire sales. And this could be even worse. Builders right now are slashing prices at an unbelievable rate as the market cools. According to an article in Bloomberg, it goes on to say markets are cooling at the fastest pace since 2006. Austin, Texas, Nashville, new construction right now offering with price cuts has quadrupled from a year earlier. Incredible. Phoenix has tripled. Tampa, the Tampa region, doubled with price cuts. So that's another telltale sign of where all this is going. Inventory is skyrocketing. These people telling you, especially I'm sure if you're talking to a real estate agent right now, and most of them, look, are not going to be honest. They need to sell houses. They need to pay the bills now. I hope, if you're a real estate agent watching this, and I know you probably don't like what I'm saying, but what I'm saying is 100% truth, I hope that you put a lot of money away, because I think you're going to see multiple down years ahead, because inventory is skyrocketing as mortgage demand plunges. This is going to be huge, huge trouble for the housing market. Demand going down, inventory skyrocketing. Active listings, according to Realtor.com, April to May, we're up. May to June, up. And we are up 18.7% right now as I make this video, 18.7% year over year. If this keeps going higher, with builders finishing these homes that are under construction and mortgage demand falls, the sellers are going to have no choice but to drop prices. And I think a lot of sellers got very, very greedy, and I think that a lot of sellers now have missed the boat. And I don't believe that this is a buyer's market at this point. We're not even close to that. But what does this look like 6, 12, 18 months from now? Comment down below. Love to know your thoughts. All of the industry tied into real estate, let's talk about that, is going to see major layoffs. Construction workers, real estate agents, loan officers, lenders, graders, construction workers, the builders, the planners, the architects, the lumber companies are going to be laying off, the truck drivers, the concrete companies. I mean, just think about you know, from piping to wiring to the electricians, it just, you know, to roofing material, to the roofers, to the framers, goes on and on and on. Everything tied into real estate. This is a gigantic industry. I would say, obviously, probably the biggest industry in this economy is tied to real estate and construction. But we're seeing layoffs right now. Compass, Redfin, these all tied into real estate. Chase laying off 1,000 loan officers. We're at the beginning stages of the most significant contraction in activity since 2006. So I just wanted to share some of this data with you. I'm going to share a little bit more with you tomorrow. But watching these markets today, all up, knowing what is brewing in real estate right now. You look at new home builder stocks; they've been absolutely decimated. It's unbelievable. Please comment down below. Let me know your thoughts. How in the world can these markets be up with the data that anybody can read, anybody can find? Real estate is done, ladies and gentlemen. The housing market's in big, big trouble. And these people who believe that this can't happen, they're going to be proven wrong. The Dave Ramseys, you know, people like that who are heavily invested in real estate, your real estate agent who's invested in real estate, they have to sell a house to pay their mortgage, to put food on their table. So they're going to tell you that everything's fine. Everything is okay. So be very cautious who you're listening to right now. You need to be listening to yourself. Read the data for yourself. Do your own due diligence. Do your own homework. People right now are canceling escrows at a historical rate, a historic rate, because they are now feeling that something is wrong. This, to me, is the worst possible time to buy a home. I don't give financial advice, but if I was personally in an escrow right now, I would be calling my real estate agent up right now, and I would say cancel the escrow. I'm walking. There's no way. I don't care if I'm paying more in rent. It's worth it to me because I'd rather pay a little bit more in rent right now than a whole lot more buying a home that I'm going to be tied to a mortgage for the next 30 years. And when that house goes down 30, 40, 50, 60, 70%, you're going to be crying. You're going to be crying because you're on the hook for this. So think about what you're doing. Prepare, ladies and gentlemen, prepare. The markets are having a nice rally. We all knew that we would see a rally at some point, but it's going to be lower highs and lower lows. And this market is fake. It's all manipulated. You got the Fed in here buying it all. But you know in the bottom of your heart what's really going on. You can see that this economy is sick. It's falling apart. It's collapsing. Why in the world would you make the biggest purchase in your life knowing that this economy is collapsing? The discounts are coming. The blue light sales are coming, ladies and gentlemen. The biggest thing, as I leave you today, the biggest thing I think that you can exercise right now is caution and patience. God bless all of you. Please make sure to like this video, share it, give it a thumbs up, make sure you subscribe, and I look forward to speaking with all of you very, very soon.